said pretty simply, do your homework, be clear what you want, ask for it, interview your potential investors just the same way that we would be kind of interviewing you. It has to be a two-way relationship.
Welcome to Cleantech Forward, a foresight podcast where we explore clean tech customers, capital, and Canada's path to net zero. Tune in to learn more about Canada's most exciting clean tech startups, industry success stories, investor insights, and academic initiatives as we accelerate the growth and impact of clean tech together.
Welcome to Cleantech Forward. I'm Jeanette Jackson, CEO of Foresight Canada. Today, our panel of investors is back to hear a pitch from Dr. Alex Ip, co-founder and director of partnerships at CERT Systems. Alex is pitching to Jason Switzer, director of Carbon Next, Marty Reed of Evoke Innovations, and Carly Anderson of Prime Movers Lab. He gets feedback and turns the table on the investors to ask them how he can fine-tune his pitch to address what venture capitalists want to hear most.
This Cleantech Forward podcast is supported by Gowling WLG. A global leader in intellectual property law, Gowling WLG works alongside Canadian cleantech companies to develop IP strategies that maximize business opportunities and increase market share while protecting valuable innovation. From idea to investment to international expansion, Gowling WLG understands the potential of your intellectual property at every stage of growth. Visit gowlingwlg.com/cleantech to learn how they can support your business today.
I'm Jason Switzer, the host of the capital investment stream of the Cleantech Forward podcast.
And with me, as always, is Marty Reed of Evoke Innovations. Welcome, Marty.
Hello, Jason. Good to be back. And would like to introduce our guest today back again, Carly Anderson, who I have known for a number of years and is a fellow hard tech investor.
Great. Thanks, Marty. It's great to be here.
Great to have you back, Carly. And this has been a lot of fun. So with that, let me set the stage. We have our entrepreneur getting ready to share their pitch with us. It's a company many of us will be familiar with, competitor in the Carbon X Prize that was supported in part by many of the folks here in Canada. So with that, let me welcome Alex Ip, CEO of CERT. Alex, welcome.
Hi, Jason. Thanks for having me on here. It's great to be with you.
Really great to see you again. So Alex, please, give us your pitch, and then we'll give the investors a chance to give you some questions. And at some point, we'll turn the table and let you ask them some questions too.
Sure, that sounds great. All right. My name is Alex Ip. I'm co-founder of CERT. We are a carbon tech company that's based out of Toronto in Canada. Founding team, myself, I have a background in developing solar materials. Sometime during when I was doing my PhD, solar prices just really plummeted. And so we were looking at ways that we could use that clean electricity to actually convert CO2 into useful products. Around 2017, Christine Gabardo joined this research group that I was building. And she really helped to focus us on the Carbon X Prize, lead us and execute on that project during the finals. And so besides that, we've been lucky to have some traction over the past couple of years. Besides being a finalist in the X Prize, we also were one of the winners of the Breakthrough Energy Solutions Canada program, which is run by Natural Resources Canada and Breakthrough Energy Ventures. And we recently wrapped up our participation in the Carbon to Value initiative, which looks at some of the most promising carbon utilization companies. And of course, most recently, we were named to the Foresight 50, which we're very happy about as well. Now, the problem that we're looking at CERT is really, if you think of all the products that we're using every day and the demand that's increasing for them, if you go back to the beginning of how those are made, they tend to start with some sort of chemical feedstock. And the problem is, since the demand is rising, if we don't turn to some more sustainable feedstocks for these chemicals and more sustainable ways of making them, we're not going to be able to decarbonize. And so if you look specifically at hard to abate sectors like chemical manufacturing, it emits about 1.5 gigatons of CO2 per year. But it's very difficult to electrify the current processes that they use to make these basic chemicals that go into all these products that we use. And this is really unfortunate because, as I mentioned, over the past 10 years, one of the kind of big miracles of the energy transition is the fact that renewable electricity prices have been able to come down very quickly, and capacity has been able to continue ramping up faster than people are expecting. But there's no way of tapping into that. And so what we've done is we've developed an electrochemical technology where we can use that electricity as well as water, and then we can use CO2 as a feedstock, and we basically can split that CO2 molecule and reform it into some of those basic chemical feedstocks that we need to make different everyday products. And we can make it into a number of different chemicals. We're particularly focused on ethylene as our target product, and that's because ethylene is the world's most widely used petrochemical. It goes into many different value chains, and so we think tackling that one gives us a lot of opportunity for impact. Now, our technology has a number of different advantages. As an electrochemical technology, it's modular, which means you can basically scale it up or down by multiplying out the number of reactors that you have, and it scales well. You can imagine either more distributed production or scaling up just by building a lot of different reactors. There's a high embedded CO2 in the final product. And what that means is all the carbon is coming from that carbon dioxide. We can put a lot of CO2 into that final product. We can put about 10,000 times more CO2 into a polyethylene product than we can into a concrete product, for instance. Now, importantly, the chemicals we make are drop-in replacements to their petrochemical counterparts. That means that everything downstream can remain exactly the same. You don't have to recertify the chemicals or products that you're using. But the main difference, of course, is that ours is renewable. And the way that works is for conventional production of ethylene, if you make 1 ton of it, you're going to emit 2, maybe up to 4 tons of CO2 for every ton of ethylene you make. In our case, there's 3 tons of CO2 involved, but we actually consume that CO2 in order to make 1 ton of ethylene. And so there's a potential net difference of up to 7 tons of CO2 per ton of ethylene that you make. As mentioned, ethylene is the most widely used petrochemical in the world. And so there's potential just from the ethylene value chain of over a gigaton of CO2 emissions avoided every year. Of course, we're not going to do that tomorrow. And so we have a plan kind of to get ourselves in and eventually scale up to that commodities market where you're competing on volume. And so we see ourselves initially going towards brands, consumer goods market, where there's a lot of demand for sustainable products, and we can access areas that have smaller volumes, but potentially larger margins. We can refine the technology, improve the efficiencies, prove it out, eventually move out to working with small to medium scale emitters and deploying our units on their sites, and then ultimately getting into the commodity space where we can really get to those kind of gigaton scale emission reductions. I'll leave you also with a quick look at some of the work that we did in that Carbon X Prize. So this was at a natural gas power plant out in Calgary, where we took some of the flue gas from a natural gas power plant, went through a carbon capture unit, and we converted that into ethylene and syngas. And this was the world's largest CO2 electrolyzer demonstration that's been done so far, and the very first one to convert CO2 to ethylene at scale and from an industrial CO2 source. So we're very happy with this. It's given us a lot of good data to continue scaling out our technology. Now we're looking for continued help. People like everyone on the podcast here today, for partnerships to help us scale up, find opportunities to deploy. And we're looking, of course, to start fundraising early in 2022. So happy to chat a little bit more about any of the details of CERT.
Awesome pitch. Thanks, Alex. Carly, over to you.
All right. Yeah. Thanks, Alex. I think I'm going to ask the main question and address the elephant in the room right off the bat. So in terms of cost, which has historically been the huge challenge for commodity products, what is it today, or what are you expecting it to be for these brands and early adopters? And where does it need to be for you to move up that roadmap and get to commodities?
Yeah, that's a great question. And so we think that we can get it today probably to around 2 to 3 times the price of a kind of commodity ethylene prices. And based on our understanding, that's going to be kind of similar to where you can see green premiums for that being acceptable. Where we're able to bring down the prices in a couple areas. So one, internally, we're obviously developing our technology, improving the energy efficiency, both on the engineering of our stacks as well as developing the catalysts. And we're also seeking those places where we can get the low cost electricity. And so obviously, as an electrochemical technology, that's kind of a key feedstock input is going to be that electricity price. And so we're identifying, places that have that, and also places where they're developing, renewable electricity where you can access kind of, potentially over generation and low cost electricity prices from that.
And maybe can you speak to many other pathways you're working on? Ethylene, the advantage is, yes, it's global. The downside is, sort of Carly's point, it's very cheap. And so is ethylene the primary? Or I guess it is the primary. How about, are there secondaries?
Yeah, ethylene's the primary one. And we're looking, I will say we're also looking at kind of bringing in a little bit of vertical integration on that ethylene value chain as well to access more niche markets and higher margin markets with that ethylene. But we're also looking at ethanol as another market where we've seen significant interest from a number of different industrial players. We've done a lot of work on developing our technology to enable carbon coupling, accessing those multi-carbon products, which end up having a lot more utility in chemical manufacturing. And so that's really where we've been putting our focus. Now, we can do other products looking at things like syngas, looking at propanol, acetate, those sorts of things, but we haven't really put a focus on those at this point.
What is your requirement for CO2? So what's your assumption either in terms of purity or cost, or how are you getting sort of large scale volumes of CO2 and at what cost?
Right. So in our models, we're assuming carbon, like the cost of input CO2 ranging from about $30 to $80 per ton coming in. And for that, it's generally pure CO2, but we don't need to use purified CO2 for our process. We know that we can run down to even as low as 20% CO2 concentration, and it works pretty well. Below that, you end up running into some mass transport issues. But and so we're actually looking at that now, how we can integrate better with upstream carbon capture, where they don't have to purify up to that 5 nines purity CO2, and how can we save energy in that process by combining the capture and the utilization steps a little bit more closely.
And speaking of combining steps, like this is actually a pretty incredible scientific device, right? Like taking CO2 from its minimum and bringing it up to useful products. I understand you're also bringing in water as the source of the hydrogen. So is this catalyst, is that doing both steps simultaneously, like splitting water and splitting CO2? Are there multiple components involved? I'm excited and want to understand what you guys have accomplished here.
Yeah, exactly. So it's all a single step process. So it looks very much like a water splitting electrolyzer, but on that catalyst, you're splitting the water, splitting the CO2, and depending on the catalyst, depending on exactly what operating conditions you have, you can tune it between different sorts of carbon-based products. But we don't need to take in an external source of hydrogen. It's all coming from the water within our process.
Any issues on scaling up in terms of that catalyst? Are you dependent on iridium or some of the other elements that are sort of becoming in vogue in the discussions lately?
Yeah, that's a great question. So there's two sides to our technology. One is on the cathode, which is where the CO2 itself is transformed. That one uses a copper-based catalyst, so you're not worried about anything there. On the anode side, right now we're kind of following what's being used in water electrolysis. So currently, yes, iridium. But we're able to kind of use different products there. It doesn't really affect necessarily the CO2 side. So we can use innovations from the water electrolysis space on the anode side of our reaction.
Very cool. And then thinking downstream, are you manufacturing, just the catalyst or the membrane? Are you going to sell stacks? Are you going to sell systems? Are you going to sell ethylene? What's the model?
Yeah. So our initial entry, we want to be not selling ethylene, because as I mentioned, selling into the commodity space is very difficult, but we'd like to be able to bring that down a couple steps more, maybe sell something like carbon negative polyethylene or something like that. We're doing a little bit of market discovery into those spaces right now. Eventually, as we scale up the process, we want to be first selling kind of containerized solutions to small, medium emitters where they can just park it on their site. And then we'd handle the CO2 and product offtake, and then eventually looking into something like licensing for larger scale implementations.
Okay. And are you outsourcing some of that stack construction or system modular assembly?
Yeah, definitely. So on like all the balance of plant, we're outsourcing that. It's not new technology there. We are doing most of the electrode and stack design ourselves, outsourcing the manufacturing of it, but we're still doing a lot of innovation on those components. We're taking in as much as we can from what's done in water electrolysis, but there's still some differences that we can innovate on, so we can learn as much as we can from the design of those stacks, but we're not relying totally on those existing designs.
We have time for one more question from the investors, and then Alex, we should turn the table and let you ask them some questions.
Well, let me ask what in your mind would be the sort of switch, if you could flip it, would really unlock this market? Meaning, what really enables the growth here? Is it, say, a carbon tax like we have proposed here federally in Canada? Is it a low carbon fuel standard where maybe you are going ethanol and supplying that into the California markets? Or is it, consumer driven, as brands, the Patagonias of the world that have really been at the forefront are sort of insisting on this type of these solutions? What do you think is the secret to your growth?
Yeah, so I think a big part of that's going to be consumer driven, and I think the consumer driven mindset also is going to help drive governments to implement things like carbon taxes when they have popular support for that. And I think related to the consumer driven part of it, I think also the government can play a role in procurement of low carbon materials. So if you think of again for our case, making ethylene and polyethylene. For the past couple of months, I've been seeing them replacing water mains on my street, and those are all made of HDPE pipes. So you can imagine, municipalities demanding that those are carbon negative pipes that they're putting in for 50 to 100 years and really sequestering away that carbon, but demanding that that's a way that we can do it. I think that's kind of a big purchasing power from the government that can really help move some of these technologies along.
Awesome. Alex, let's hear it from you. What would you like to know from Carly and Marty that might be helpful to you or to other entrepreneurs who are considering a similar path right now?
Yeah, I guess there's a lot of ways to go with that. I guess since you guys are really in the hard tech space, I think really specific to scaling up hard tech companies, I guess, where are the ways that you've seen companies fail in being able to scale up hard tech solutions? Is it from potentially outsourcing too much of what they're doing in order to build out their systems, trying to focus too narrowly or too broadly on what they're doing? Just curious in what you've seen as kind of potential red flags and in scale up pathways.
I'll go first because I know Marty's seen a lot of this stuff. I'll say, I don't think you can ever, or I've never seen an instance where somebody has outsourced too much. Seen a lot of cases where people have not outsourced enough. So that's one. I would say in this space, there's may almost be a partnership land grab in some ways, especially on problems that are like widely understood, like plastics or feedstocks. And so I'd say like the faster you can go to lock up some of those partnerships and show that you have specifically the offtake, right? You have your feedstock, your process box, and your offtake. Securing the offtake at the price points that you were talking about is going to be one of the key like miracles that we need to believe will happen.
I'll take a slightly contrarian view, although we may well be aligned, which is I support outsourcing, but not figure out what your core intellectual property is. And that really you have to keep inside. But is there value in you recreating electrolyzer stacks? Probably not. Like go partner with Nell, whoever, pick one. So you can outsource that. The other is usually companies are overly optimistic in their TEAs or their techno-economic analyses. And, they've got this Excel model and, as soon as an engineer who's actually ever built something at scale looks at it, they throw up all over it. And so the sooner you can get those sort of salty veterans, if you will, either on your team or, sort of directly engaged on your behalf, the better. Just it's a dose of reality. And the last thing you want to do is pitch to an investor or a customer and have them immediately kind of pick away at your model. You lose credibility. So better to come in and kind of sort of under promise and over deliver than vice versa.
Got it. Yeah, that makes a whole lot of sense. Another thing that I'm very curious about, so, I think we've all seen there's been a lot of movement in the VC space in clean tech, climate tech over the past year or two. And so there's, certainly a lot of options. I guess for ventures that are seeking funding, what are the sort of value adds that they should be looking for outside of, obviously the capital? But what are the other things that they should be seeking from potential investors? What should they be asking at their meetings with them?
So I think some of that depends on the team. right? If you know that you are going to need connections in certain areas where you don't have them yet, that's something you want to try to lock down. If you know that you've got all those connections and you want strategic help on financing, that's something you might look for something slightly different. Same for how much support do you want on some of the services VCs might provide, like talent, government relations. I'm naming some of the stuff that we do because I'm biased and I think we offer a pretty awesome suite of help. Creative directing, marketing, things like that. So I think, taking a look at where you're at and where you need to, what you need to have to get to the next step is one thing you want to look for in screening investors.
Yeah, and maybe said pretty simply, do your homework, be clear what you want, ask for it, interview your potential investors just the same way that we would be kind of interviewing you. It has to be a two-way relationship. And I often joke, like, be more thoughtful in selecting a lead investor than you are selecting a spouse, because it's actually pretty easy to get divorced. The flip side is once an investor's on your cap table, it's really hard to get them off your cap table. So just, I think maybe Carly, you had said it, which is it's never too early to start engaging investors in the discussions. We're not momentum investors where it's like, hey, here's a term sheet, you've got 24 hours to respond. That's not how we act. And so, come to us early, tell us, hey, here's where we are, here's where we hope to get, build that, long-term relationship. That's what we're looking for.
It's been great to see how this field has changed recently, and now people like me and Marty actually have to compete for entrepreneurial talent. So definitely lean in on asking for what you want and starting those conversations, because we understand and we do want to help.
It's a good time to be an entrepreneur in this space. I will say that. No, it's unique times, and what I then also might advise is don't wait too long to move one way or the other, because the one thing about a party is we never know quite how long that party's going to last. So take advantage of it while you can.
Alex, thank you so much for joining us today.
Thank you so much for having me on here, guys.
And we'll take a few minutes just to chat informally about some lessons we can draw for other entrepreneurs in this space. Well, that was terrific. Let's talk about the pitch from Alex and CERT. Anything you guys would draw from that you particularly liked?
I will say he sort of spoke to, here's how this product is made today, and here are the carbon emissions, and here's what it is with our process. And it goes from kind of a +2 or +4 to a -3. I thought that was really helpful and smart. It just, as an investor, the one thing we always worry about and get nervous is, how do you compete in a commodity market against massive incumbents? And whether that's, other things we'll touch on in this series, like concrete or, fuels or chemicals, the incumbent is really motivated to continue to win. So I think I would encourage Alex to really more clearly articulate where he thinks he has a competitive advantage and can gain traction, because it's just a green premium quote is tough. It's a tough space, or a tough sell.
Yeah, I mean, I think it was a great pitch. I love the origin story lead in. That's something that we always like to know. Like, hey, how did you get here? How are you looking at this problem? I would like to see, because it sounds like they have some momentum with the X Prize. Use that to get a logo slide. Get some initial letters of interest or any kind of expressions of interest from some potential partners. Do that customer discovery. I'm sure that would come out in later conversations, but the sooner you can get that out, the better.
Well, it was notable you asked him, not these words, but what's your revenue model?
Yeah, and I mean, it's good that they're thinking through at least the roadmap of, okay, consumer products to commodities. And I also like Marty's question around, hey, are you going straight to ethylene? And unless you're making a polyethylene bottle, and even then you need somebody to do a post-processing step. And what does that look like? And I think that was a great question too, and something we could have drawn out a little more. Alex could have volunteered a little more.
I mean, to Carly's credit, the question about business model is an important one that we are seeing a lot of, which is, a lot of these innovations are in the catalyst or in the membrane. And if you look at actually the full system that needs to be delivered for, ultimately to go to market, it's really a tiny slice of it. So for a small little startup to try to do all of that can be really tough. On the flip side, selling a catalyst into, one component into a much, much bigger market or sort of product stack, it's really pretty tough to build, brand recognition, traction, margins. And so, I don't know that there's a right answer, but at least understanding how they're thinking about it is really important.
I think that's spot on. I think, one area where there's been a lot of innovation is membrane design and production, right? But it's really hard to make VC level returns on membrane sales. So I just, violently agreeing that business model definition is important, and the sooner you work on that, the better.
So one comment I'll make is sort of counsel for Alex. This is still a market that there's a lot of interest, but frankly, it's very much a frontier or emerging space. And the companies we've seen that have successfully raised tend to have a common theme, which is they have a great storyteller at their sort of core on their founding team that can really put the pitch together, really engage customers, investors. And so these are the 12s of the world. In disclosure, I'm an investor in 12 companies like Charm or Heirloom that are in the carbon dioxide removal space, aren't necessarily, driven by your PhD chemical engineers, but oftentimes have folks that come out of the sector, from McKinsey or wherever they may be, that are just great at understanding a market and telling a story. And I can't begin to say how important that is. It makes all the difference, frankly, in valuation and velocity.
Marty, I will say that Commonwealth Fusion just raised $1.8 billion today, led by a PhD. But then, there's...
Who would have thought the fusion space would suddenly be the hottest space out there? But yes, that is a fair point. Fusion is largely led by PhDs, and I've never seen more money flow into a sector than that in the last month.
$5 billion in total, right? That's we might have a whole series on fusion, like we were joking about earlier, Carly.
Oh, I think that would be fantastic. Yeah, so I think that the takeaway I had is it's possible as a PhD to tell a good story, but I agree with you. Play to your strengths, and storytelling is just critical.
Yeah, my counter to that, Carly, and whether this is fair or not, I think everyone agrees that if we figure out fusion, there's no market risk. Whereas I'm not convinced yet if we figure out how to do CO2 to ethylene, that there is a market there, because I don't know that it ever competes with hydrocarbons in the way we produce it today. That's the thing I still struggle with.
Well, I would just play devil's advocate there, because I would say in both cases, there's an obvious market. Like everybody uses ethylene and everybody uses electrons. The problem is the cost of it. What is the cost of producing those electrons or producing that ethylene? And I think fusion is just so exciting right now that you can't look away. But at some point, that is also a techno-economic problem. Is how much does it cost to do that versus a solar panel plus a battery? And I'm a huge fusion advocate, but that's something we can't lose sight of.
Yep, that's the right question.
So let me come back to Alex and I guess some of the ventures that we've seen previously, and just ask, so what happens now? You've seen the pitch. Now you go back to your other GPs and you have a conversation, right? What happens now? What's the magic that comes before a term sheet?
Well, I'll say that there's a lot that comes before a term sheet, but so in our case, we've got, and most venture firms will have a deal flow team, and so we're looking at, literally hundreds of deals a year, for which out of that will flow, some handful, generally speaking. And so, by way of process, and this is pretty typical, we get together once a week or usually every other week, and we put all the new deals that have come in, and they're in a CRM system, and we go through them, and we all kind of vote, hey, what's our level of interest? Is this exciting? Is it not exciting? And then, if it does get that kind of thumbs up, then we designate someone to step in and take a lead. And on our end, that is usually a technical resource. Doesn't have to be a PhD, but we've got, a few of those folks on our team now. And then someone on the business lead side, and we kind of tag team it. And then that process, I think I said it earlier, we don't try to rush that. If you need a term sheet tomorrow, we're not the firm for you. And so that can take, weeks to months to be, depending on how prepared the company is. But high level, that's the process. And just understand there are so many reasons why a deal might fall out for, again, an infinite number of reasons. But that's the process.
Jason, that's a great question to ask. And I think we're set up pretty similarly in having meetings maybe once a week where we review deal flow. I think the way we structure ours a lot of times is, hey, what's burning, what's on fire, what needs a decision right now. And so I think that speaks to some of the things Marty's talked about with you don't know what else is going on, right? There could be 3 deals in deep dive and closing the same week that you pitched a VC. And okay, now that might get pushed to the next week or the week after that, just due to bandwidth. But following that first discussion, where hopefully you've created some champion within the VC who's like, guys, we have to look at this more closely. This is awesome. Then we do something similar, and there's a deal team, usually with a technical lead and a business lead that carries the process forward. Probably have another couple conversations before asking for a really deep data room, trying to be respectful of the founder's time and the team's time. I think our process typically is somewhere between 4 and 10 weeks, depending on how much is going on. And as an entrepreneur, the best thing you can be doing is following up. It's a flag if an entrepreneur is not following up, if it's been more than a week and you haven't heard from us. Just because emails get lost, things happen. I understand it's a 2-way interview, but it's definitely a positive sign when somebody's being respectful but persistent.
Thanks for listening. Join us next time when we sit down with Paul Austin from Fort Capital and Rock Ripley of Gowling WLG to talk about Canada's global competitiveness in clean tech and what companies need to do to prepare for international expansion.
To learn more about Foresight's programs, events, and more, visit us at foresightcac.com or follow us on social at ForesightCAC.